Oh, that was Ian. Ian, you're in the meeting 2 times. Yeah, I see it twice. I'm going to kick one of you out. I'm going to expel you. All right, now we have 1 Ian instead of 2 Ians. Crazy virtual world. Okay. All right, let's go ahead and get started. So I'll just kind of read off the participant list here. Apologies in advance if I butcher your name. Not the first time, probably won't be the last. Let's see, we just had somebody join by phone, a 612-306-6411.
That's Joel Bader.
All right, want to do a quick little intro, name, organization, and what interest you have in catastrophic risk management. Nope.
Oh, did you want me to do that, or?
Yeah, we're gonna have everybody do a quick intro. You're top of my list because you're a phone number.
Oh, I'm actually trying to connect it to the picture. I don't know why it isn't. Let me see. Can you see me?
Oh, there we go. Yeah.
Okay. Yeah, I'm Joel Bader with Wells Fargo. I've been working with Dixon Wright on the Orange Button project. And I personally am interested because I worked on catastrophic insurance risk before I joined Wells Fargo.
Cool. All right. Ben Bronstein.
I'm Ben. I'm working with Financ City Schools and met with Dixon like last week. So just here to hear more about his work.
Cool. All right. Thank you. Kathy.
Hi, I'm Kathy Schaefer, and I am a PhD candidate at UC Davis, and I'm trying to explore the opportunities for community-based flood insurance. And so the person who just introduced themselves, I'd love to connect with you after this.
Sure, yeah, absolutely. Why don't you just, Dixon can get us the contact information, I'm pretty sure.
Thank you.
Offline.
How about Kathy Penny? No. Oh,
there we go. Nope, I'm here. Camera. There goes the camera. Good morning. I'm Kathy Penny. I'm at USA Insurance Services. I work with Dixon Wright, so I'm steeped in continuing to understand how we can use data in risk management.
Cool, thank you. DZ, I don't know who DZ is.
Sorry.
That was Esfandiar, I muted you. DZ? No. Eric Altman.
Hi, Rune, how are you?
Good.
Eric
we're
Altman
gonna make it today, Eric. We're gonna do this.
That's good. With Eric Altman with Sampo International, I am a surety bond underwriter. I've been a friend and business associate of Mr. Wright's for too long. Obviously being in the surety game, risk management, especially catastrophic issues, are of particular importance.
Great. Okay, Esfandiar.
Yeah, what I was going to say, Ron, that I'm getting still the feedback echo. I think Ian comes in and out twice. Anyway, this is Esfandiar Imani. I'm with Safer 3, focusing on risk management, reliability, and resilience. Had more than 25 years of experience in risk management in energy industry.
Great. Thank you so much. George Kelly.
Hi, I'm George Kelly. I work with IEC and ANSI and write standards for PV and wind turbines. And I also worked with Dixon and John and the Orange Button effort a couple years ago.
Cool, welcome. Gianpaolo.
Can you hear me?
Yeah.
Okay. I'm Gianpaolo Rythiri. I'm an Italian architect and engineer, graduated at the Polytechnic of Milan, where I'm an assistant. I'm an assistant teaching. I deal with sustainability. I'm interested in risk management and energy management. I work for companies such as Tesla here in Italy, and I'm currently part of an MBA here in the Bay Area at San Jose State University.
Cool. Welcome, welcome. Good to see you
Thank
again. Greg.
Hello, this is Greg Zagorowski, and been a friend of Dixon's for about 10 years, formerly on the XBRL committee. About 10 years ago, helped initiate reporting using XBRL, and Dixon invited me to a couple events, how to get that into the energy sector. I've also served as a senior financial accounting resource to Pattern Energy, PG&E, and just generally interested in how we can improve the ecosystem for infrastructure. So thank you, Dixon, for the invite, and glad to meet all of you.
Great. Welcome. Howard Foster. You're muted, Howard.
Okay, now I'm good. I'm Howard Foster, CCRM, specialty in GIS and the geography of risk, but I'm very interested in all aspects of rational and semi-rational methods for dealing with risk. And Ian Mitroff and John Radke taught a studio about 10 years ago now. Well, maybe 8 years ago. And all I could do was harangue the poor students about value at risk modeling. Any kind of single approach that gives you a single number is, I'm sure we're doing a lot better job now. But anyway, that's my interest.
Cool, thanks. Emery Rowe.
Hi, my name's Emery Rowe, and I'm with the CCRM, and I study high reliability management and practice and theory. Thanks much.
Great, thank you. Ian Mitroff.
I'm Ian Mitroff. I'm a member of CCRM. I study complex messy systems and one of the principal founders of the field of crisis management. Thank you.
Great. Joel.
Oh, we've heard from Joel already.
Oh, we did. Okay. Jonathan.
Hi, I'm John Previtali. I work for Wells Fargo Bank in the Renewable Energy and Environmental Finance Group, and we are tax equity investors in the wind and solar space. We finance about 10 of wind and solar in the U.S. each year. So,
your audio is coming in and out.
I have been involved with the Okay.
Yeah, I think we lost you there. Well, we got most of it. How about Josh?
Hello, good morning. My name is Josh Tinalia. I'm with Solagent Distribution. Specifically, I'm in our finance and direct pay department. I was introduced to this program by Dixon Wright, who is, I guess, we are a customer of his, so looks like he's inviting a lot of folks to this. I'm specifically interested in learning how to mitigate risk within the supply chain when it comes to finance. So very excited to be here. Thank you.
Cool, thanks. All right, let's cycle back to Jonathan and give you another try.
Okay, is this better? I switched networks.
Oh yeah, much better.
Okay. Okay, great. Yeah, I work for Wells Fargo Bank. I'm an engineer who oversees the technical due diligence of mostly utility scale projects, but also portfolios of just distributed generation solar. And I've been working on the orange button effort with Dixon and many other people for about 5 years now. And recently, with regard to insurance, as folks may know, we've entered into a hard market or hardened market for hail and windstorms. And so I've been working to try to, better assess risk, particularly for hail, but also windstorms using meteorological data in collaboration with engineering firm called VDE Americas.
Cool. Thank you. Kofi.
Hi, Rune. Can you hear me?
Oh, yeah, we hear you. Good to hear your voice again, my friend.
Yeah, long time. Hi, everyone. My name is Kofi Nkabi. I'm a CCR member and consultant at Exponent. I probably been working on these issues for the past 20 years. Right now, my focus is primarily on quantifying and managing risk for energy utilities, and both from a technology standpoint as well as from an organizational standpoint.
Cool, thank you. George Lane. George Lane, I see ya. It's your turn. You're on mute if you're talking. You're on mute if you're talking. I see your lips moving.
Mute.
All right. Otherwise, I'll have to make it up for George. I'm good at that. We'll cycle back to you, George. Okay, let's see. Next on my list, Mark. You're up, Mark. I know we talked before the meeting, but it's introduction time.
Yes, thank you, Rune. My name is Mark Nichols. I am a member of an organization called Citizens Acting for Rail Safety. We're based in Minneapolis, St. Paul, and we are working to attempt to improve the training and planning for emergencies involving particularly hazmat by rail, and very interested in catastrophic risk management and modeling in particular. Would like to educate myself, and in particular with the respect to events that happen very seldom but have catastrophic potential, such as the release of a toxic by air tank car in a metropolitan area. So I'm very interested in learning from the group. Thank you.
Great, thanks. Dave Olson.
Hello, everyone. I'm Dave Olson with Crow, interested in data standardization and performance measurement. And who's this Dixon Wright everyone's talking about?
We'll find out in a few minutes. All right, how about Patrick Lamb?
Hi, my name is Patrick Lamb. I'm an engineering geologist with NGO. Oh, that's a funny background. Just flipped on the video for this. I'm an engineering geologist with NGO, working a lot with like earth science risk, geologic risks, and hazards. I'm also on the Berkeley Haas teaching team for the last couple of years for data science for executives at Berkeley Haas. So definitely interested in multiple aspects of the forthcoming discussion. Thanks.
Cool, great, and welcome. Patrick McGinty.
Yes, thanks, Rune. I'm a consultant to Tinaboo Square, a Paris-based software developer, and we are very much engaged in the data interoperability aspects of Dixon's project. We provide all the horsepower behind sharing of information, data collected.
All right, great, welcome. Pete Dumont.
Yeah, hi everybody. Pete Dumont, CEO with Prairie Dog. Just here to support Dixon on the call and talk a little bit about what we're doing with also a part of the OS2 Operating System 2.0 research with the University of Texas and the Construction Industry Institute, CII.
Great, welcome. Peter Martelli.
Hello, everyone. Peter Martelli. I'm a professor of healthcare administration at Suffolk University in Boston and a longtime member of CCRM.
Welcome, welcome. And then Thomas, I have on the list here. You're on mute, Thomas. I see lips moving.
Yeah, sorry.
There we go.
Thank you. I'm Thomas Frossard, so I'm based in Paris. I'm heading the lab of Tinnibu Square, the same company that Pat McGinty is working for. And we have a special interest in risk sharing, and we've been working on some blockchain prototypes to better connect the construction ecosystem, especially on renewable energy projects. And we have very special interest in looking at how the Orange Button project develops.
Great, welcome. Let's see, if I missed somebody, apologies, but we'll go ahead and move forward with the program. So before we begin, I'd like to just give a general background on the Center for Catastrophic Risk Management, which was founded back in 2005 in the wake of Hurricane Katrina. As you can tell by the participants on the call here today, we're a global group of applied researchers from academia, government, and industry who've come together to develop pragmatic solutions for the complex, multi-jurisdictional, messy problems of the 21st century. We conduct fundamental research on catastrophic risk through empirical data by identifying and engaging targeted teams whose expertise are uniquely tailored to each challenge. CCR aims to help make the intractable manageable. So with that, it's my pleasure to introduce our speaker for today. Dixon Wright specializes in surety bonds for construction and has been engaged in various industry initiatives to modernize surety products and services through data standards and enable data analytics for improved risk management. Sounds like a crazy concept, Dixon. The current DOE Orange Button initiative seeks to harmonize the data between capital and financial markets, the construction community, and regulators to reduce soft costs and promote innovation in the solar industry. The objective is to leverage data and the construction ecosystem for increased infrastructure reliability. And with that, it's my pleasure to hand the reins over to Dixon.
Thank you, Rune. And I particularly appreciate the opportunity to speak to this group. One of the main objectives of the Orange Button is to try to break through the silos of the various stakeholders that are involved in infrastructure. And your audience today is quite a breadth of stakeholders across multiple silos. So I hope that what we can talk about today is the big picture and some of the obstacles to bringing together data interoperability for infrastructure. And I particularly wanted to do a shout out to my Orange Button associates who are joining this call so that they can answer some of the questions I cannot. I am an expert of nothing, but I push everything. And I push data interoperability for its value and as a business proposition. And so again, a lot of the experts that are actually doing some of the hard work are on the call and can answer questions, which is part of the platform for the brainstorming and collaboration, which I really appreciate. So I'm going to go ahead and switch to share screen, and hopefully everybody will now be seeing the page one. So this slide deck will be provided to everybody, and I might add that the slide deck is more of a movie than it is any individual slides. So you'll see links and a lot of information. The objective is to make the slide deck a valuable resource for you, and it'll be provided to everybody that's signed up for the list or requested from me. So let's just jump on in. The overview, at the end of the day, when we talk about infrastructure reliability, the capital markets are really driving it. That's where the money comes from. But when you think about how changes are done to the bigger picture, you know, there's really three ways. The government does things through studies and regulation, takes forever. Innovation by private entities certainly is effective, but it's often proprietary and doesn't come out much. But really the capital and financial markets, when they start to understand what's going on and they can do data analytics, they are much more flexible, move faster, and can change the way access to capital by implementing best practices. So that's really what this talk is about. The capital markets being able to understand their risk better so that they can modify the way access to capital happens. And that's part of the objective of the Orange Button. So if you think about a typical panel array, you know, on the left-hand side, you see the panel of yesterday, the array of yesterday. We really didn't know what was going on. Tomorrow, we know that these panels are getting much more sophisticated with measurement and monitoring, and you can actually describe down to the panel how an array is working. And so the question, you know, on the financing side, is which panel array will get better financial terms? The obvious answer is the panel array that can demonstrate to its financial partners how they're performing, what they're performing, measurement, and are they compliant to the contract. In other words, if they can demonstrate predictable performance, they will get better financial terms. And that doesn't apply just to the solar array, it applies to all infrastructure projects. If you can measure and monitor and show that you are performing per plans and specs or per requirements, the financial markets will be much more supportive and provide you better terms and conditions. So I have the abstract here for those that get the deck without having the abstract ahead of time. So I'm not going to read it here, but the fundamental focus here is that the data right now is still fragmented all around the place. So if you look at today's reality, the fragmented multiple sources of data make it very hard to do portfolio risk analysis, data analytics, or any of that. So our objective for tomorrow is to be able to aggregate data that can be accurately analyzed to identify those failure points, because it's that portfolio management and that needle in a haystack that we might not otherwise have seen that creates the impact. So a simple approach might be, if you think about a solar racking system that, you know, per compliance uses 1 bolt, some projects use 2 bolts. You can imagine that after a while, if the insurance industry starts to recognize that the panels with 2 bolts has significantly less loss ratios, then to get financing, they're going to require 2 bolts, even though code compliance only requires 1. That's the demonstration of the private market being much more flexible than it is government regulations. So it's simplistic, but you know, it's that needle in a haystack trying to find out what causes and what it could be predictive analytics. So let's go to the problem statement. The World Economic Forum just did a deal in Davos where they called it the Great Reset. And they said, if you could reset as a result of the whole COVID and the whole reprocessing of the way we do things, what would we do? And so our collaboration group, the Orange Button, submitted a deal to the effort. And we said the problem is legacy systems cannot exchange data. So the solution is to fix that, make it so that legacy data can be, so legacy systems can exchange data. The outcome, obviously, is significant cost savings, data interoperability provides innovation, risk management, and all the rest. So let's go quickly here on the federal button, because we keep talking about the orange button. There are really 3 buttons out there. The blue button for energy, the blue button for health data, the green button, which is energy consumption. You'll know that as your smart meter. And what was unique about this is the green button put together all the utilities across the United States and created one data set for energy consumption. So you could hit your utility, whether it's PG&E, Southern California Edison, Con Edison in New York, and you'll get back a data set on how you're consuming energy. You know, for the normal consumer, you can analyze that data. It'll tell you to run your dishwasher at night. But for big campuses and big users, that ability to know how you're using your energy allows you to modify how you use it. In other words, you don't cycle up all your machines at once. You try to avoid, using energy between 4 and 7. It also enables the utility companies to start to introduce tier pricing to also modify people's use. The orange button is much more complicated. It brings together the entire ecosystem of construction for the energy production. And that means your bankers, your contractors, your insurance, everybody. And instead of one data set, we have multiple data sets that rely on the ability of having one single dictionary that everybody's using for these various data sets. The objective, again, is no matter where you are or who you are, you can send information wherever to whatever system. And the data sets can be successfully and reliably imported by your stakeholder. So think about it like Microsoft Outlook. We all think of data interoperability as something complicated, but we do it every day. We send our address file out of Outlook with a simple click and out she goes. We send it as an attachment. And it's a data set. So think about a solar system performance. It's the same thing. The orange button gives you the ability to put together a data that could be sent to someone. They can import it or export it however they want. The data set is set up of terms used in the dictionary. So whatever that particular use is from your business partner, they can put it into their system as they need. So let's talk a little bit about the ecosystem stakeholders. I keep talking about capital markets and financial markets. The distinction between the two is capital markets are the one who actually put money on a job. It's singular to a job, and they're specific to a particular job. The financial markets is a much broader ecosystem. That's the banks who provide lines of credit, insurance products, surety products, in which are generally much more broad use. But they're both the capital market and the financial markets can drive the use of data standards by making it a requirement to have their product or service. This is an incredible article that McKinsey put together, and I suggest that all of you, when you get the deck, click on this. There are thousands of different companies that are exchanging data in the construction ecosystem. But as you'll notice, they all come to capital financing. At the end of the day, money drives the requirements of most of the data element and most of the data exchange. So if you look at a utility scale solar project, it has a whole group of different stakeholders. But it's the same on a $500 million utility scale as a small $50,000 interconnection. So let's go a little more granular to the data element. As I mentioned, the problem to data interoperability is that people and legacy systems have different definitions. If one is using profit before tax, the other is profit after tax. You can exchange the profit data field, but it's apples and oranges. The objective of XBRL is for all publicly traded companies, when they report to the federal government, the SEC, that is apples to apples. So you and I as taxpayers went out and changed XML, which is just a field name and a tag, to XBRL, which is really nothing more than XML on steroids. It provides a whole level of deeper information so that the data is unique and you've squeezed out the data, or you enable data interoperability. So in our work in the Orange Button, we've now created a dictionary of the data taxonomy definitions so that stakeholders can do apples to apples data exchange without any third party, without any data deal. And this is put together by the government, so it's patent-free, license-free, and all the rest. But we're not alone. The Construction Progress Coalition has been working very closely on working on the common data exchange in the construction market so that there too we can use apples to apples. And Pete Dumont, thank you for joining us today. They are doing fantastic work in creating smart contracts. Smart contracts, likewise, in other words, for the stakeholders, they have to have common data elements in order for smart contracts to work. And so I highly recommend that if anybody has questions on smart contracts at the end, I thank you, Pete, for joining us. You can answer questions. The other standardized effort, the AGC and a group of people have put together standardized documents for construction. Again, the effort towards standardization is really taking hold, and that's what really creates the efficiency. But the data interoperability is important. So again, when we talk about a single element, when you start gathering them together, you get what we call a data stack. So let's talk a little bit about the data stack. You know, when a project first begins, you know, you have the permit and you have the permit data, you have the beginning of the information. But as it goes through its life cycle, we start doing project underwriting. We get the references, the utility, the regulatory. We start putting it together. And then we, on my side, we'll put together the surety set, which is important to the other stakeholders. And at the end of the day, when the job is done, you should have an operational report that says how it's doing. And then ultimately, you can send out a monthly operating report. So all of these sequences, the data set grows. It's not stagnant. And just as you can change a data file in Outlook and send it to somebody and they can see the updates, the stakeholders can all engage in the data stack that they need as the project goes through its life cycle. And it's also not just for solar. Any kind of energy goes on the grid would have a data set that could be incorporated and be part of the data stack. Again, the objective is to try to keep it simple. Business users like I can get information from my stakeholder, whoever I'm working with. I can import it into my system as easily as I can import an address file from Outlook. So let's talk about the life cycle of a project. You know, the job begins with that initial data set. But as it starts moving into construction, that contractor will be filing monthly applications for payment, which is a host of information on how the project is going and how it's being built. And if you think about data analytics, you know, as the project goes on, you know, the first month you're going to have one application for payment. After 6 months, you'll have 6. Ultimately, you'll have a whole stack of different monthly applications for payment that can collectively tell you how the project was built with granular information for how it was actually installed. When you think about now going into ongoing operations, it's the same thing. You now have monthly operating reports that can stack up and can tell you how the system has been operating over time And now you have a project life cycle of data. Now you've probably seen a chart similar to this. When under the current mechanism, quite often when a job moves from life cycle, from phase to phase, there's a loss of data because not all the information is transferred. If there is data stacks and there are consistent use of data, you will be able to allow the project to go through its life cycle, maintaining that data from construction, from the permit, all the way through the monthly operating reports. That is really important because these data stacks that grow and grow, they add up. And when you talk about big data and all the rest, you can now look at it from a portfolio management. If you've got 100,000 or 300,000 projects, as the insurance companies and the banks do, they can start to look at that data and start to look for those things, the 1 bolt versus 2 bolt, that you may never have understood or recognized on a singular project or a one-off. But when you start looking at the entirety of a portfolio, you might be able to find things in which let you know that this is a probability of default, this is a probability of failure that you wouldn't have otherwise known. And that's really where the big picture is. So let's talk about some use cases. First, as I mentioned, the monthly progress payment. This is not new. Caltrans 15 years ago started publishing every progress payment on the web. And you can drill down and actually see project completion, paid to date, stop notices and LDs. Incredible project information. Virginia Department of Transportation also provides infrastructure information on its construction projects that a surety or any stakeholder could in real time see how it's happening. Now, 15 years ago, in conjunction with California State University, Chico, we created Project Status Connection, and we're actually pulling the data from both different disparate sites. And we're able to give the surety industry one dashboard on the project likelihood of failure by simply stacking it by which projects were behind schedule, had stop notices, or were being assessed liquidated damages. At the end of the day, that's really the source of predictive analytics. And that's what we shared with the Department of Energy when they were looking to see how they could build a smart grid with the same kind of transparency, with the goals of being able to provide the financial markets with the efficiency of data interoperability. So let's go on now, the construction onto the monthly operating report. This example is very simplistic, but most solar projects are single purpose entities under a portfolio and generally are tax driven. They have depreciated, they have all sorts of mechanisms where on a GAAP basis, that single purpose entity's financial statement may not look that good. Well, I'm going to step back a little bit and talk about the surety market as a financial market because you'll find that it is similar with banking and just about everything else. There's a certain point where on the left-hand side, you can see the positive underwriting factors. On the right-hand side, the negative. And the more the negative outweighs the positive, sooner or later, you're going to get to that point where you're not going to be able to get a bond, you're not going to get financing, you're not going to get insurance, whatever it is that you're trying to get from the financial markets. So what we're saying here is the bond is denied at a certain point. And if we can change that point to where the surety could write the bond and provide the financial guarantees, that would be because it had a better understanding of its underlying risk. So again, the surety market has different terms. If you've got nothing but green and no red, you're going to get the best of terms, all the way up to where you're being required to provide collateral. So in my industry, the professional engagement is in banking and anything else, you were involved the entire way. But what's happening now is because of data analytics, you're starting to see a lot of things being done automated. You can get online insurance instant issue. You get online surety instant issue. So the automated part is now starting to see much more prevalence. And so it's growing and growing to where now the professional engagement is actually getting narrower and narrower, but it's now really where we're needed, where eyeballs and handshakes and an understanding of the project is important. So let's go back to the monthly operating report. We have a GAAP basis in which the single purpose entity may not look that good. If in the underwriting, you're trying to increase your positive underwriting factors, the approved underwriting information, the monthly operating report will let you know. If you have a PPA that requires 1,000 watts a month and you're doing 1,200 watts a month, that information is important. It also allows you to improve risk management because if it's not producing 1,000 watts a month, you can engage early to find out why. And that is obviously because you can start to do AI on the portfolio management, literally shifting the underwriting from GAAP, where you really don't have an idea of what's going on in the project, to actually knowing how a project is and understanding the value of that single purpose entity. So as evaluated by the surety, they can now have a much more estimated value and a much more better understanding on equity than GAAP could ever do, changing a declined opportunity for the solar installer or the developer to now being approved because he's giving the information to the financial markets that allow much more better granular underwriting information. So the market actually can be extended so that more capacity could be provided to the infrastructure markets based on the ability for the surety industry, the banking, the insurance industry to understand better what its risk is by that portfolio data analytics. So moving on to the surety bond, that's a surety product we write the guarantees. The traditional is done with a paper surety bond with a power of attorney, a jurat, a seal, a notary. We exchange it with wet signatures, with FedExes. It's really a nightmare. Thanks to COVID, it's accelerating now where people are accepting electronic surety bonds much more. But that is still a PDF now, and you're relying on DocuSign for who signed it and whatnot. The next generation that's coming is a digital surety bond, and that's what we're working with Tinabue and SureWave, and I thank them for being on the call today so that they too can answer any of your questions directly. But the digital bond will allow the stakeholder to not only validate the bond, so he doesn't need the DocuSign and all the trappings of the paper bond, but receive back the digital information on that bond that they can import into their system. So if you look at a utility guarantee bond, the bond form itself is still the block, whatever the text is of the form, but it begins with a set of data elements, and those data elements can then be imported by whoever is the stakeholder. As I mentioned, a surety bond may have multiple stakeholders that want to know the surety bond is in place for risk management, for compliance of the loan. Now with the bond validation number, each one of these stakeholders can get a proof of validation and get the data that they can import right into their system instead of having it a PDF that just sits in a folder that cannot contribute to the portfolio management. So one of the interesting mechanisms and platforms that's out there is called on-bill. On-bill repayment has been thoroughly researched. And again, I'm not going to go into this text. This is so you can look at it, the slide deck later. But the basic premise is that you can borrow money through the utility and pay it back on your bill. Now that's a low default rate. So the debt service and the debt charges should be less because it's a low default rate. And the idea being that if you can have a $10,000 a month utility bill and reduce it to $1,000 a month by putting on a solar system, then you can pay $9,000 a month on your debt service and still be cost neutral. And then after you've paid off the loan, obviously you have savings that allow you to do it. And it is simple. You own it outright. There's plenty of models out there, the 30-year deal where you have somebody else own it. This allows you to own it directly and directly receive the savings. So it's a very simple structure. But financing comes in after the construction is completed under the traditional on-bill, so it's a little tough. What we're looking at is adding predictive analytics and surety-based risk management into the on-bill structure. And here, your borrower can put up a utility guarantee bond guaranteeing the financing, the money. Therefore, the debt structure and the debt financing should be much cheaper because the value proposition is you're going to get guaranteed for payment. We're also introducing, under that same model, performance bonds on the contractor. Because what does the dentist know about procurement, or what would they do if a contractor were to fail? By bringing in a surety industry that backs the solar installer, we protect the lender, the dentist in my example, and also the lender, because the dentist is protected against default, so too is the lender. So we're adding risk management tools that really rely on tracking performance. So the traditional on-bill, the debt service could be pretty high, but when you reduce and eliminate most of the risk to the lender, the debt service can be significantly less to cover the expenses for those risk mechanisms. And now your savings after year one start to really appreciate, and you can really have some savings. And what this would allow the market to do, the capital markets, is by introducing risk mechanisms, we can bring in more financing into infrastructure through the on-bill structure. And again, it doesn't matter what your infrastructure project is. On-bill is specifically for solar. But when you know what the data is, whatever your construction project, you will be able to get better financing. So risk management, protect the borrower, protect the lender, and you're going to have easier access to capital. So where are we today in this model? Well, in 2014, the government passed the Data Act, which requires all federal agencies, in order to get funding, to report how they're spending it, much like Caltrans does on how they're spending. So there's legislation already in place that's moving the federal government. We all know that we're trying to do the UN Sustainable Development Goals, which likewise looks for us all to find ways to improve our fight against climate change. The XBRL has done an incredible job putting together data-specific uses of their taxonomy for contractors, for solar, for the fintechs. The SBA is now looking at working on XBRL so that it can provide small business administration support to small business and whatnot using the same dictionary. Environmental reporting is now starting to look toward XBRL because it's coming out of financial reporting. And the more you could look at the data analytics of green energy allows the SBEs to look at that as well. FERC is now starting to require public agencies to report to FERC using XBRL. So the adoption of this data standard as something that is breaking through the silos is really out there. NIST has recently put out a guideline for the data interoperability. What's really exciting is that California Public Utilities is now currently investigating what it can do to improve financing options for energy customers. And PG&E is launching a pilot with on-bill and looking for the orange button to come up with innovative and creative ways to bring financing using that on-bill structure. When you look at some of the more interesting things too, the information on data, and again, this slide is provided for those with Get the Deck. The Solar app is putting together the permit data across 64,000 different AHJs, authorities with jurisdiction. So imagine if you're an underwriter for a bank or a surety or insurance, the permit information is going to be very valuable for you if you can import it from wherever you are in the country. The AHJ registry is something that Jan is on the call today, can talk to. They're put together 64,000 different people and helping to standardize the process of putting together the permit. And then you have the permitting and inspection finalized. You can imagine if you're insurance and surety, if you had the data on how the project passed inspection with inspection data, that starts to build the data for that large portfolio. So again, my summary is if you know that 2 bolts are better than 1 through your portfolio management, you're going to, in the financial markets, look for that. But also when you can provide that you're using best practices, your access to capital will be better. Because our ability to have consistent data that allows us to put together this portfolio is where the magic comes in. And that's where the orange button is creating the foundation to make that a reality. So what I really like about this platform when we're discuss it is, you only get a half an hour to talk. Most of the time is for collaboration between the stakeholders that come to this call. And again, I'm excited about the fact that you come from different segments and different silos, because brainstorming now, we've sort of laid out what the potential is. We talked about what we can do. So what do we do for brainstorming? So what I would suggest, you've probably all seen this before. We are right now at the chasm. We have a number of people using the technology, a lot of people implementing it, but we still have to get that over that hump. So I would suggest that as we talk about our brainstorming and collaboration, we think about where we are as a chess game. Overcoming the chasm is much like a chess match. There's 2 main things that we see. There's opposition to disruption. We know that across all segments, no matter what you're talking about. And for us to prevail, the ecosystem data interoperability has to prevail. So let's think about it. To win the chess match, we have to understand disruption is our biggest problem, but meritocracy is our biggest asset. That's 2 opposing forces, no matter what silo you're in. So let's go back. on the solar side and what we're doing with the orange button, we've got some strong offensive tools. Certainly, we've got a lot of government support. The digital surety bonds is starting to enable the ability to bring together multiple stakeholders on a single deal. The orange button data standard can now be used by smart contracts, blockchain, and all the rest. And XBRL is an internationally recognized and adopted standard. But our opposition is still significant. Number one is economic. A lot of people are very fearful that they'll lose their job to automation or AI. So they prevent really the collaboration necessary because they're afraid it'll harm them economically. The other problem, obviously, we've talked about is the very fragmented ecosystem. And the more personal, it's not my idea, that's not my department, they don't want to deal with it. And the other deal is perception that there's other solutions out there, what we call vaporware. And you've got to look at a bunch of minor issues. Obviously, apathy, why fix it if it's not broken? You know, the government regulations, the difficulty of making changes, nobody wants to be responsible. Everybody's in a short-term mindset. And of course, we all have a history of failed IT projects. But going for us, we have innovation, entrepreneurial, we have trade groups jumping in, we have international standards, we have the reset we talked about with the World Economic Forum. We have plenty of successful IT projects. There's plenty of people here with long-term mindsets. And at the end of the day, we all know that being able to implement these changes will give us each a competitive advantage. So to win the chess match, we have to, number one, get rid of the disruption. That's number one. After that, we have to overcome the economics. They're not my idea. We have to really address those issues. To win, we have to look at an ecosystem approach. It cannot be a silo approach. So we have to do that as number one. Number two, we have to look at on-bill financing as a partnership that we can all collaborate because it really has multiple stakeholders all looking at one single deal across an ecosystem. The California Public Utility investigation is going on right now. We should all reach out to the California Public Utility and work with them so that they approve on-bill financing so that people can actually apply for it. We should all support the PG&E's on-bill pilot so that they're trying to see if they could work it out for their consumers and actually work. And then lastly, and most importantly, as we start finding all these data elements, we have to work on expanding the XML taxonomy so that the extra data fields we find can be put into the formal taxonomy and can be relied on by all the stakeholders as they seek to do data interoperability amongst each other. We do that, it's checkmate. Meritocracy prevails. So for our brainstorming, what I'd like to talk about, how do we leverage our positives and how do we overcome our negatives? So that's my 30 minutes, and I thank you very much. And we'll turn it over to Rune again, and we'll turn off my screen share if I can figure out how to do that.
All right, so we will try. If you have a question or want to make a comment, why don't you put a note in the chat, and then we'll try and manage it that way. Otherwise, I think technology is going to get the better of us. So I've got the chat open, and if you've got something, or you can try and raise your hand. I think you can virtually raise your hand and visually raise your hand. Those are two options. Not everybody at once.
Okay, well, I'm going to start off. You know, I've been working in two different silos. I've been working with Thomas, who's on the call here, and with Pete Dumont to try to connect the service that Thomas provides with TenantView. Is he provides surety support and surety bonds for construction contracts. And Pete is working on construction contracts in the silo of contractors. And so I need to connect these two. So thank you both for being on the call.
Yeah, I would love to connect, and you know, a little bit about. I'll just tell you a little bit since you kind of teased it there, Dixon, in the presentation. So with the OS2 research and development project, we are in the process of designing this ecosystem concept you talked about right at the end there, Dixon. And the idea here is to really have a healthier business climate for asset developers and those that deliver them. And this is taking the form of what we've called putting together neighborhoods of companies. And we use that kind of cornbread weekend language of neighborhood because most people understand what one of those is, where basically companies have individual identities and business goals, profit objectives and such, but you're part of a greater thing, something with a long-term outlook that transcends any individual project, and it's a long-term relationship, and it consists of many firms. So some of you on the call might be familiar with IPD, Integrated Project Delivery. Dixon put up the consensus docs earlier. Consensus docs 300 is the standard form IPD. If you have some familiarity with that, you'll understand the neighborhood. But we're taking it in 2 additional dimensions. One, we're going much deeper in the supply chain. One of our hypotheses is, could you create a shared risk reward contractual arrangement between tens or even hundreds of companies, as opposed to single digit IPD arrangements today? 2, take it long term. IPD today is about one project at a time. We're really looking at a long term participation of different companies in the supply chain. And the neighborhoods could create gravity and form around different sectors like solar, or perhaps different regions, perhaps specific clients. You know, some clients that are getting interested in this are in the data center space, heavy industrial oil and gas, healthcare. So there's a lot of construction sectors that are looking at this. And so imagine multiple architects and engineers, multiple contractors, multiple electrical subs, multiple suppliers of pipe, steel, solar panels, whatever the case may be, involved in a common ecosystem together. So that's the big idea. To make it work, obviously you have to have trust and transparency. This is where blockchain comes in. Most of what you talked about, Dixon, is really, really well suited to be on a blockchain platform where you have, transactions that are visible to all parties simultaneously, high level of cryptography. We can use multi-party computation, secure sovereign information to make sure that information applied there could be maintained to the extent required from a confidentiality standpoint, but then also have the benefits of that be able to be provided to all the members of the neighborhood. And so, and everything you talked about could be is really, really well suited for blockchain. So I think there could be a good marriage there between these efforts. So with that, I'll shut up and just kind of want to give you guys a quick highlight of the stuff we're working on. And our group, Prairie Dog, is the one facilitating and leading this stuff in the industry. We're putting the first implementations in the market now in collaboration with the University of Texas and CII, which is heading up the research.
Yeah, and I would add the slide deck that everybody will get. You'll have the links to those so you can research them and reach out to Pete directly. One other comment I should add is, Pete's working across silos, across infrastructure projects, which is really key. But the other thing that's important is XBRL is actually a financial reporting standard. So you're going to have other data standards which are much more specific and granular, like the IEC and the IEEE. XBRL does not replace those. We're not going to try to be the data standard for every piece of data that's out there, but rather the common data elements for the financial markets is XBRL. And those financial markets may look to, the IEC and the IRC, which I'm so happy George Kelly is on the call, because there's a huge amount of effort that's been done to create data standards for that kind of granular information. And knowing what you're doing as a financial partner, you may want those granular pieces of information in which you'd look to those standards for that information, not XBRL. And I don't know if George wanted to touch base on that. I would welcome that, or if anybody had any questions.
Yeah, Dixon, I could just say that one example of that is the PV system performance monitoring standard, where we have defined a lot of electrical terms, but we did manage to get all of those into the orange button taxonomy, I think. So we're trying to keep it as seamless as possible.
Yeah, George, you've been on this 2 or 3 weeks now, right?
Yeah. Or 7 or 8 years.
So, Roon, I've seen some questions. Do you want me to address the chat box, or would you like to?
Yeah. Why don't we try that? I think Emery looks like the next person with a question.
Yeah, I wanted to thank you so much for a really wonderful discussion, and I have to put my apologies out. This is totally new to me, So my question will seem more naive, and it's not just a question to you, but to your colleagues. And it relates on the brainstorming issue. My background in the research suggests that there is a link between better real-time information and real-time risk management. So taking your terminology, has the increase in granularity in your data collection also been accompanied with an increase in the real-time nature of the information, such that somebody can go in there, if you will, and actually make a real-time estimate of changing probabilities of failure?
Yeah, I would say the real time has been most successfully implemented in the solar space because they are tracking solar system performance down into the seconds. And it really is important on a bigger scale because the utility has to do it for load maintenance, but also the investor itself really wants to know how their system is performing. So that real time is there. I can't say that the financial markets, as far as the insurance, surety, and some of the other secondary players, are looking at that data because frankly, it just seems to be very sort of out there and futuristic than it is real. And one of the things we're trying to do with the Orange Button collaboration is to try to make it to the financial markets that it is real and that you can use it for underwriting. Now, when we look at timeliness, Caltrans is a perfect example. We can monitor, I think it's $15 billion of construction over 4,000 contracts with that dashboard, but it's a monthly update. It's not real time, but a monthly is fast enough for a lot of performance on construction maintenance. As it goes into other infrastructure areas, it all depends on where the measurement and monitoring is to determine what the response to that information would be. And so a lot of it cannot be real time. There'll always be some delay, but it all depends on, the different silos and different needs. I don't know, does that answer your question?
Yeah, thanks very much.
All right. So Patrick, general comment, the data sets are great for looking at trends and probability. I'm not sure that's a question or a statement. Okay, are case studies available? Yeah, that's actually what we're doing with PG&E, is to try to use that pilot. Now we have to get approval from the California Public Utility Commission to provide on-bill. But if we can get that authority, then we're going to try to do a pilot to see if we can't implement that and create case studies where we can bring in low-cost capital because we can demonstrate the risk management, change the pricing model. Other real case, I think individual banks, Wells Fargo has been a leader in using data in its underwriting. I know Jan Rippendale has done a lot of success in helping develop the data standards at the beginning of a project, from the permit, even before that to the AHJ. So there are successes. And Jan, if you wanted to talk a little bit about the effort with the AHJ and Solar App. And you're on mute, I think.
Better?
Much better. Thank you.
I was off mute, but got my headset. So I was actually thinking a little bit about what Pete was saying about neighborhoods. And one of the key elements for doing this successfully has been setting up reference data. So we've got the data definitions with Orange Button, but then actually having reference data sets that immediately add value to anybody who's using them, like the full list of AHJ and their contact information and their polygon shapes, so you can figure out where you're located within your AHJ, for instance. It takes a difficult analysis job away from a whole bunch of people. They don't have to determine which AHJ it is that they're getting their permits in, and has led to this neighborhood effect. So Solar App is using that to define their AHJs and then to indicate whether or not this specific AHJ uses Solar App. And then the NABCEP inspection questions, you've got a set of permitting questions that go with Solar App, and then the NABCEP inspection questions can actually get closer to alignment, and they can be specific to what an AHJ's requirements are. And then the people doing training are interested in saying, if you've got this question, this is why the building code exists this way, and this is how you actually address that concern. And so by starting with the AHJ reference data set, which solved one specific task that needed to get done that's complicated, we've incorporated and added these kind of adjacent interests into the industry and started, to build some momentum and make progress. I'm expecting that we're going to do the exact same thing with the product registry, which is going to be modeled off the AHJ registry. And, if we can get that off the ground and get everyone participating in the way that needs to happen, but the CEC has said theoretically they would much rather have the product registry maintained by somebody else and the manufacturers verifying that the information is correct and having a place where we can expand it in all the ways that designers and everybody wants that to work. And then we're immediately delivering value. So if you just look at the structure of Orange Button, it is difficult to see how you're going to immediately deliver value. But if you've got these reference data sets tied to it, then you've got something immediately usable for somebody, and it's a carrot that you can just pull them all in and set your neighborhood around. So that's kind of been our experience so far about the best ways to get adoption.
Jan, if you would touch base on one element that I get here all the time, and again, I'm a business user, not a technical person. XBRL is about a 20-year-old technology, and one of its strengths is it's really inclusive, and it's a big structure, and it is kind of bulky in that regard. But it does provide that data definition, that apples to apples. Jan, could you touch base on working outside of XBRL? Because you're looking at using the XBRL, but not in its entirety. You're not sending an XBRL file.
So we are doing an open API JSON version of the system. In XBRL, you've got primitives so that you actually always know your data value and which precision and accuracy it might have and which units apply. So that we've identified and the timeframes. So there's 6 primitives that go on any XBRL element, and we're keeping those 6 primitives in our JSON objects. So in that way, they're interoperable. But because we can actually find and hire JSON developers in abundance, we're able to make a lot more progress much more quickly. And for JSON developers, we literally have a mechanism where we just create sample JSON. So they can look at the object and they can look at the spec and they can see the other data definitions, but they kind of don't care. They just look at the JSON object with some sample data, and then they move ahead and program it the way it's supposed to be. And I don't know exactly if that's saying that programmers like to have barriers around put on their blinders or what, but what we found is that we've got rapid data adoption. So we're using the site as our main object, and a site can have an address and different contact information. And then a site can have many PV systems, it can have many battery systems. So site is our main object that we're using right now. And we've been able to connect from an ERP system to a system that's just giving an app for project status for homeowners. And then we've got another way of using site that goes to a different app that lets homeowners do referrals and send them back in with another site object. And for doing a permit with Solar App, we're going to send the site object with all of the different bill of materials and the more detailed information about what they need for the permit. So we've got this one object that is got multiple use cases, and Solar Success and Blue Banyan is connecting to all of them. So we need to build that API once, and we can connect with 3 different software providers now. So it's been really exciting to see this grow. And we've been able to have new software providers look at that, and it pre-solves all their problems, because they're like, what do I do when you've got different bill of material restrictions, or what do I do when you've got different bill of services? And it's already solved in that site object. So we're actually accelerating development even when it's brand new to the software company. So it's been really great that way.
So let's have another question. How are data that affects competitive business intelligence handled and secured? I will go back to my Outlook example. If I have an address in Outlook and I forward it to you and you put it in your Outlook or Google Notes or whatever it is, how you use that data in your system, that's in your system. So your intelligence, how you use it, how you apply AI, that's all in your system. The fact that you exchange data does not mean that how you use the data is an open book. It's not. This is just a data exchange. And you're right, I could exchange my permit information with a bank, with two different banks. One may be very sophisticated to look at it, and the other one may not. It's the same data. People will do what they do with it differently, and that will create the competitive advantage. The idea of data interoperability is to promote competitive advantages, not to make everybody the same.
And Dixon, I just have a quick comment on that. On the AHJ registry, that is actually an area that installers use a lot for their secret sauce about how they get permits through quickly. And we actually collect all of the AHJ information that's public, and then they have their own notes with their own secret formulas or exactly who to talk to or keywords to use or whatever it is that it takes to get their permits through that AHJ faster. So we have built a structure that has both all the public information and the custom.
All right, the next question is environmental permitting. And I would suggest that I'm sorry, Thomas, did you have a response? You're on mute. You got it. You're on mute, Thomas.
I just wanted to add to what was just said about the confidentiality, but I see that Pete is making the same comment more or less than what I wanted to add. That thanks to blockchain technology, basically you can decide which information you want to share with who, and sometimes you can store public proof of consensus or agreement on some data without sharing the data themselves. So it's where it comes and what it's providing the transparency, confidentiality, and what is really granting is the sharing of information in real time to all stakeholders, which is really important. Then you can decide which information to share with who. Thanks.
Okay. Pete, I see you've got your hand up.
Yeah, can you hear me?
Yes.
Just make sure I'm up. Yeah. No, I'm just gonna echo those comments. And somebody asked a question. I think one of the questions about use case, not related to solar, but there is active use case around this in upstream oil and gas now when using this kind of live empirical field data now to feed blockchain-based systems now to prevent blowouts and failures in drilling operations. And to use this AI and predictive analytics to determine basically a blowout is going to occur before it actually occurs, and then alert the various operators in drilling operations before that happens. And again, enable through this use of a couple of things, technology, and then the better arrangement of companies, you lower the risk profile for the companies and for that entire enterprise dramatically. And it's already manifesting in insurance cost reductions in the range of 25 to 50%, because the insurers have much higher visibility into the operation and know that the people operating these assets are using data now to ultimately prevent losses. So there are some things happening. Happy to provide more information if anyone's curious about what's happening in that space.
Yeah, I think blockchain and the whole smart contracts has got huge implications for efficiency. And so
yeah, and we're just starting. What's cool is that this is just creeping into the construction industry now, and it's just the sky's the limit as far as how we can use this technology and make much more streamlined contractual relationships and take a lot of the friction out. You may or may not be aware, but on the average capital project, about 40% of the dollars are wasted on transactional friction in the supply chain, largely because people don't trust each other. We have onerous contracts with unfair risk shifting across different party boundaries. It's hierarchical. Everyone hires everyone else, and you got multiple layers of markup upon markup in this. So we got to flatten the supply chain while also making it more efficient again, technology enabled ability to do that now. So, so yeah, it's a good time to be in our industry, right? There's a lot of cool things that are going to be unfolding over the next 5 to 10 years.
Yeah, and I might add on that, a lot of infrastructure is public, but with the smart grid being financed from the private sector, the constraints of the public sector, because you just don't get the change in public works, how projects are procured, put out to bid, and managed. In the private sector, you can be much more faster. So, Pete's work in the energy space, and our goal with working in the energy space, hopefully the government will look at it and see best practices and help move toward it.
Mm.
So let's go back to some of the questions. Environmental permitting. Right now, the solar app is for just the solar permit, but obviously the permit for a solar is got the basis of any construction permit or anything else. And I would imagine as the success of the solar permit process starts to take hold, you'll start to see it go into different silos of the permit process. And hopefully environmental permitting will look at the successes of the solar permitting and incorporate that and bring it into the environmental side as well. All right, environmental, I'm looking for a question. Fascinating. Sorry, I have to leave. Does anybody else have a hand up? Oh, yes, Howard?
All right. I'm sure you've been asked this question a lot, and it's probably outside of it is outside of the scope of what, good grief, of your presentation, but I hope there's a good question at the end. So imagine you have a state in the US whose electrical grid is apparently isolated from the rest of the country. It has a contracting arrangement among the producers and consumers, which allows for unlimited liability. The cost of electricity seems to be higher than what others pay. And the system is catastrophically fails when you have adverse weather events. So I guess my question is, how do you expand a system like this that you're describing, which is very dependent upon day-to-day data collection, expand to the larger areas of risk, let's say catastrophic risk, which is part of our mission in life. So I was just wondering if you had any comment on that.
Hey, Dixon, let me help Howard unshare his screen. So move no, you were close. There's the ...
Yeah, this is not me, I don't think.
No, yeah, right there. Click that one, Howard.
Oh, okay, Howard's got it. Okay. I was wondering.
Okay.
No, go back to not the camera. It's the little rectangle with the X in it.
Rectangle.
Nope. Go to your right. Move to your right, past the microphone.
Up here?
No, you're very close. Do you see the little rectangle with the X in it? Just to the left of the ...
God.
Left.
You're very close. You're on the hand.
That?
Move your mouse 2 icons over.
Okay, all right. That what you mean? Dismiss?
No, it's the little rectangle with the X in it.
Oh, God.
Let's see. Can I control your screen?
Yeah.
No.
No.
That's okay. Why don't we move to the next question? I'll see if I can figure out how to control the screen.
Yeah, Howard, can you go back up to the little X on the upper right hand of your screen and click the X so you stop sharing your screen?
Or maybe that isn't Howard. Who's typing in how are storm risk hazards modeled? Whoever's typing a comment or a chat right now is sharing their screen. And I don't have a way to see who that is. There we go. All right, cool.
I love technology. All right, so I'm trying to look at any questions. It doesn't look like we have any other questions. Does anybody have any hands up? I cannot see any hands up.
Yes, I'll make a comment here. Dixon, you and I talked about, potential collaboration down the road, maybe some workshops or seminars. From the discussion here, I am beyond excited at the opportunity we have to make some meaningful advancements within the risk management world, pretty much across all infrastructure domains. So for me, I see this as a great conversation starter. And I would look for ways for us to continue the conversation, grow the audience, help develop these case studies so that people kind of, they learn by seeing. The web stuff is nice, but I think in person is a little better for idea exchange and all that stuff. So I would be interested in maybe we target a fall workshop. We've got lots of real estate at Berkeley. If folks are interested in coming out here, we can also try and partner up with the Energy Institute. But let's get together as a group and formalize this and try and advance it, because I only see positive things coming out of this notion as opposed to negative things.
Yeah, I definitely think, and again, the digital surety bond is my little silo. What's good about it is it is a document that multiple stakeholders want to have. In a solar project, the panel provider is protected by the payment bond. So him having a copy of the payment bond would help the supply chain. The project owner is protected by the performance bond, the lender. So that's a financial document that can be shared with multiple stakeholders. But I think from my conversations, the thing that has created the most interest is blockchain and smart contracts. Because really, it's the contract that's the nucleus of the ecosystem. And so I would, if we're going to do a workshop, I would suggest that we kind of focus it around smart contracts and how it becomes a nucleus.
Yeah, no, that's great. And I'm not sure if we have the time or someone wants to do it, but the blockchain notion is foreign to me. So I don't know if there's a quick little high level overview that someone would be willing to give. But yeah, I see a lot of potential there, because there's a lot of challenge with confidentiality and all that stuff, and it seems like this is a nice way to address those anxieties.
Hey, Rune, on this isn't a plug, it's just an easy way to get to it, but on our website, and I put our link up there on the resources page, there's a handy link to a short YouTube video. It's only like 5 minutes long. It's a kind of a blockchain for dummies, quick overview, right? That's just a little give you a little flavor for what it is, and it's in layman's speak, so it's not complicated or anything like that. But I'll just give you kind of my view of it, and I'm just a dumb engineer, so I hopefully can explain it fairly simply. But everyone knows what a database is, right? A database, we all have them in our businesses, and they've been referred to here. So you can think of a database as a vertical house that stores information. It's a vertical silo, right? It may be on the cloud, but someone owns that database. Someone controls it, usually a company. And the information in there is the property or whatever of a company or whatever. But the problem with databases, as we all have probably experienced, is they're susceptible to failure. Maybe viruses, perhaps, maybe malfeasance. Somebody gets in, changes information, they get corrupted, and so forth. And they're owned by one party. The governance of a database is whoever owns it. Blockchain, if you can envision now, is a horizontal distribution of data across multiple computers that replicate each other. So, Rune, if you wanted to go in and change a piece of information, all the other computers would see that attempted change and cry foul and essentially not allow it to occur. So it's basically, they call it a distributed ledger. So the information in it's distributed across multiple computers. And so so that technology is powerful then to have basically trusted information on it, because whatever's recorded on the blockchain was factual at the time and date it was recorded. Okay. And they call it immutable, meaning you can't change it. Now, if information needs to be revised or updated, fine, you just write another block. And those blocks tie to prior blocks. So blocks of information build on each other, hence blockchain. It's a chain of sequential blocks of information that build. And so it's kind of known to be somewhat, kind of the best cryptography, best security of any data solutions in the world today. And that's why they use it for cryptocurrency. And, they're using it in healthcare now to track COVID vaccines. I mean, there's all kinds of uses for blockchain, from simple to complicated. So that's kind of an easy way to think about it. It kind of becomes the trusted intermediary between parties. It starts to take the place. Like, have you ever bought a house? We probably all have. Who's that? Who manages that transaction? The title company. Why is the title company needed? Well, the title company is needed because somebody needs to verify the ownership of that property, right? You can't just trust that the buyer and seller can't inherently trust each other. So there's an intermediary in between them that validates the veracity of the transactional history of that property, and that it's validly owned by the seller and no one else has a stake in it, all that. So all that eventually will get replaced by blockchain. Much the same way, power of attorney, lawyers, intermediaries like that, same type of thing. It kind of fills that role of the trusted transactional host between two parties. Does that make sense?
Yeah, absolutely.
Okay. Thomas may be able to add to that, but that's kind of a quick, okay.
I think that was perfect, but indeed, if you want to have a follow-up session, for me, it will be difficult to travel until the health restrictions are over, but I'd be happy to join as soon as I can. But maybe a presentation could be given on how it really fits into this specific use case and how it contributes to risk management overall.
Right. That's a good idea.
And Thomas, you're coming in from Paris. What time is it in Paris?
It's 8:30, and I will have to go for dinner very shortly.
Well, thank you very much for joining us. I appreciate it. You win the farthest away award. So I see a hand up from Mark, and I might add, Mark and I spoke a little before this began, and he said he's looking for information on railroads. And I said, well, our objective is to try to break silos, but I didn't know if I could get to the railroad. So Mark, your hand is up. I hope you found some interest in the conversation.
Yes, I did. Thank you very much. And much more to learn, I'm sure, but very informative. And all of the presenters, all of those that contributed, I think did a terrific job, as well as you, Dixon.
Oh, thank you. So, Rune, I think we're out of hands up, and it looks like we're out of questions.
Okay, yeah, so, we'll work offline here and let's put together some upcoming work events or seminars or virtual in person. But I think there's a lot to be discovered here. So let's keep the conversation going.
You bet. And again, I want to big a shout out to my Orange Button colleagues. We come from all different parts of the silo. Most of us are volunteering on that Orange Button committee to bring public benefit. And so them attending the meeting today, I really appreciate it. I thank you very much. And I hope that we can contribute to UC Berkeley's dialogue and the platform you provide to bring solutions together by bringing different people from different places.
Yeah, and before everybody clicks off, if any of the attendees here are interested in giving a presentation on whatever topic, just shoot me an email. We're in the process of setting up our fall speaker series, so we could even do an entire series looking at this subject, but from different perspectives.
And then it looks like I have one last question, and then we're going to close it out. How are storm risk modeled to address catastrophic risks? And I can share that there are people that are part of the Orange Button, one of the climate service, which is actually looking at climate data and applying it as a data analytical tool for the construction and property maintenance and whatnot. And you're going to start to see climate data and the impact of future climate events be part of risk modeling. And I'm happy to share a link to that company if anybody wanted to send me a specific request. And John,
I also have a quick comment on that. Yeah. So at least for solar and wind, storm modeling is not very advanced from the insurance and in the insurance industry. And I think that is, those are relatively technologies, so they're not like 8 decades old or 100 years old, like trains. So what we found is that insurers don't do a good job modeling storm risk for those asset classes, particularly because they don't have models that represent the resiliency of those asset classes, the strength of those asset classes to resist different levels of storms like hailstorms, tornadoes, hurricanes, things like that. And so that's some of the work that I've been working on with a company called VDE America, because as I mentioned at the beginning of the call, we're not actually able to get sufficient catastrophic peril insurance, particularly for windstorms and hail on renewable energy projects. So we have to, we've been using models with
John, your bandwidth is cutting up.
Solar power project to basically figure out how to self-insure. So I can provide more information to anyone interested in that.
Thank you. You gave us a secret answer, and right as that secret answer came out, you got cut off and garbled.
Okay. Sorry. So
All right,
yeah,
Ruth, I'm going to turn it back for you for closeout.
All right. Well, thanks everyone for joining in the call. It was a pleasure meeting all of you guys virtually, and stay tuned for further collaborations.
All right.
Thanks, Rune.
Thanks.
Thank you, everybody.
Bye.
Thanks, Rune. Thank you.
Thanks, everyone. Bye. Bye.